Hello and welcome everyone to our webinar on how a private equity investment could work for your business, presented by Evolution Capital Partners. My name is Megan. I am the Senior Editor for Divestipedia.com, and we will be your host for today. We'd like to begin by thanking our webinar sponsor, Firmex. Firmex is a global provider of virtual data rooms, helping to run over 10,000 new data rooms a year with more than 75,000 companies worldwide, trusting Firmex as their virtual data room provider to exchange documents supporting processes such as financial transactions, mergers and acquisitions, and more. Thank you for joining us. Now I'd like to introduce my colleague and co-founder of Divestipedia.com, Mr. John Carvalho. Divestipedia.com is your online resource for mergers and acquisitions, valuation, value creation, and other divestiture topics. John?
Thank you, Megan, and thank you to all our guests joining us today. We have a really great topic for our webinar about the specific structures around private equity investments. We're going to have a number of questions for our guests on this topic, and then in the last 15 minutes of the webinar, we will be answering questions from the audience, so please feel free to submit them as we go along. I'm joined today by Brendan Anderson, who is the co-founder and managing partner at Evolution Capital Partners. He will be explaining their capital structure, which they've coined evolutionary capital, and how that structure can be beneficial to business owners. Brendan has been an operator and active investor in small growing businesses for almost 30 years. In 2005, Brendan co-founded Evolution Capital Partners, a small business private equity fund specialized in helping entrepreneurial businesses transform their organization by providing a foundation for growth through its process called the 5 Pillars of Business Freedom. Since its founding, Evolution has had 7 growth companies named in the Inc. 5000 list, pretty impressive, and Evolution itself was ranked 197 on the Inc. 500 in 2013. Hello, Brendan, and welcome.
Thank you, Megan and John, and also thank you, Divestipedia.com, for including us in this webcast. And thank everyone that's dialed in and listening. We're excited to talk about evolution and small businesses in general. As John mentioned, at the end we'll have some questions and question time period, and we'd love to answer answer any questions you have for us. I'd also like to point out that, evolution, our purpose or passion is inspiring evolutionary leaders to create evolutionary businesses, and whether we invest in those businesses or not. So we believe we have a very open platform, and we try to get more and more open, and anything we can do to help your business grow or resources we can share, we're willing to do that. So keep that in mind as we kind of walk through some of these slides.
Yeah, great. And based on the sign up for the webinar today, there's definitely some interest on this. So let's get started with some of the questions that we have for you today, Brendan. So the first one is how did you come up with this idea for your capital structure? I know it's very unique, and I know that you guys coined it evolutionary capital. So tell us a little bit about how you came up with the idea for that.
Yeah, we joke. We like to put the word evolution or evolutionary in front of every word, so we feel like we got to make it our own. But to be fair, we've been at this for a very long period of time, and there really has been an evolution of evolution. I kind of think back to some of the kind of the basic things that the core purposes and values of why we do what we do. And I think back to when I bought my first business back in 1995, and I was would buy it and operate it, and I was absolutely blessed to have passionate investors that provided a great deal of support. And at the time, I didn't even understand what they were doing for me, in helping me kind of organize financials and organize a plan. And but it was really that's kind of what they did for entertainment. But they really did let me run the business. And I think that that's a key component, because at no point in time, should an investor believe that they can run a business. And we at Evolution sure don't believe we can run our partner companies' businesses. So, that's kind of the foundation. We kind of in the foundation of that is we also talk about these 5 pillars, and we fundamentally believe that if a company can implement these 5 pillars, and we'll get into more of that discussion in more detail, the 5 pillars later on. I personally believe when they embrace these 5 pillars, they're always successful, and I'm sure Marlene T behind our office would kill me for saying always. She would say almost always, but I believe that. I think on the flip side of that, it's pretty important to look at. There's a gentleman, or Dr. Gary Kunkel, who's with the Institute for Exceptional Growth Companies, part of the Edward Lowe Foundation out in Michigan, and he's done some wonderful studies that show that in businesses that don't find their purpose and fundamentally don't use best practices, less than 2% of them are successful, and quite frankly, it's a lot lower than that. But and he uses it's unbelievable data set. So I think that the data is there. But fundamentally, getting back to kind of how we came up with this, again, kind of certain things make big impacts in your lives. I was having a bourbon with Bo Burlingham, of a longtime editor of Inc. magazine, and he's just one of these guys that's passionate about small business, and he looked at me and said, gee, Brendan, it would be great if you guys could teach the 5 pillars and figure out a way to give the company back to the entrepreneurs. And that, coupled with another, many conversations. Another one I'll talk about is I had a wonderful conversation with Jack Stack, who is one of the founders of SRC Industries down in Springfield, Missouri. And I'm sitting and talking to him about one of the companies we had. We'd grown it from like 30 employees to 250 employees, and he literally just cut me off and says, Brendan, you got to think bigger. You got to think much bigger. And he kind of criticized the private equity model, and and for those of you that don't know Jack's story, he took a company with 13 employees, and it took him a little while, 35 years, but today they have over 1,600 employees, and just unbelievable growth in a very challenging industry. So it really is those, long answer to a very simple question, but it's really all of those things wrapped into one, and we feel like we've come up with a structure that effectively ensures that the 5 pillars get implemented, and that ultimately the management can make the choice of what happens to the company, whether it's sold, whether it's whether they grow it for the next 35 years and turn it into the next SRC Industries.
Well, it's a great detailed answer there, Brendan. So what are you trying to achieve? Or what's the biggest barrier that you find to investing in these kind of evolutionary companies that you talk about?
And I love the question, and honestly, it always comes down to 3 things. In a business that we believe in, and that we think that the management teams are evolutionary leaders in our terms. Number one is a fit. Do we share the same values as them? And that one I think is pretty easy to figure out. The next 2 are typically the deal killers. Number 1 is valuation. What is the company worth right now? And then the third one is control. Who gets to decide what? And I kind of ask the audience to picture a $4 million business with about $1 million of EBITDA. So, very successful business. The entrepreneur's got lots of choices, but if you picture that business, it's probably still that entrepreneur is the chief cook and bottle washer. They have and so that entrepreneur fundamentally believes that business is worth 6 to 8, maybe $10 million, and to them it is. But then if you look at it from a financial or an outside buyer's perspective. If that entrepreneur hits a bust, the company is almost worth nothing. To make that company worth something, we've got to invest in a CFO, sales managers, sales force, programmers, back office. And so fundamentally, when you add those costs and you add those risks, to an outside person, that company is not worth anywhere near what the entrepreneur's value is. And so it really comes down to that difference is the main reason why most deals don't get funded.
Yeah, no, I'd have to agree with you, Brendan, that obviously valuation is always one of the biggest hurdles and one of the biggest barriers when it comes to this finding outside investors. Being in the business, you see risk a lot differently than you do when you're from the outside perspective. So ultimately,
if you can show it. If you could show an investor, if you can show an investor how cash flow is going to steadily come in from here for the next 10, 15, 20 years, the company's worth just lots and lots more than if you can't. I mean, that's what people are buying, right? So anyways,
agreed.
Big,
yeah. So next question here, what are you trying to achieve ultimately, and what are the goals of Evolutionary Capital?
Yeah, well, when we sat back and tried to figure out what we wanted from the product, really it was obviously, in addition to finding the right partners, because people are everything, we needed to be able to invest the right amount of capital, sufficient capital that the entrepreneur and Evolution believed that it was enough capital to get us to where we were going. And that's a process of budgeting and planning and really working with the entrepreneur. We also, in a small growing company, we don't think banks are a great capital source as you're growing. And so if you notice, if you look at our deals, we use almost no or very limited bank borrowings, and quite frankly, never personal guarantees. It's just when somebody's got a big personal guarantee on a bank debt, it just does change the way that they think. And I've been there. I know, I can get into that another day. But it's important that there's a strong balance sheet if we're going to call on big customers. We've got some great stories of a company that couldn't walk into they're selling to big banks, and with an audited balance sheet showing that they had $2 million of cash, and to a big bank, $2 million is not a lot, but compared to prior to our investment, the bank wanted to know this software company was going to be around. They wanted to know it was a strong partner. It literally was the difference to getting deals. And importantly, if you have the necessary capital, you have the team, it frees up management to work, on the business and not in the business. And then lastly, again, I'm going to pound this 5 pillars home over and over and over again, and we'll get into a little bit more at the end of this show or the end of this cast. You got to have great financial statements. And great financial statements is a big word, and I will tell you that 99% of the businesses we look at have terrible financial statements. I think hopefully some of the CEOs that have worked through this process are listening in, and hopefully they're chuckling. But kind of goes back to, if you can explain to the outside world how your numbers are working, not only looking backward but looking forward, it changes everything. Once you've got the great financials, you can work on a plan. And plans aren't meant to be stuck in the back of the CEO's desk. They're meant to be shared with your employees, your suppliers, your customers, as many people as will listen and will chime in on it. Rightly or wrongly, the way the world works, I think what we found is that if you have a great financials, you have a plan, you have a properly capitalized balance sheet, you can attract people that normally wouldn't work for a small business. And so, and again, people are everything in a deal, especially in a small company. And then we'll typically ask that a company uses, implements a process. We'll get this later, which brings a culture of transparency and accountability, which then all summarizes all this stuff into a big bow. When you got all those things, the company can have time to find its purpose. And if you look at Gary Kunkel's work at the Exceptional Growth Institute, those are the companies that sustain. Those are the companies that grow, and those are the companies that that add jobs and, quite frankly, change stuff. So I went on a little long with that one, John. I apologize, but it's obviously something we believe in.
Yeah, no, you sound very passionate about this, and something that you just doesn't seem like you compromise on achieving these goals when you implement the evolutionary capital within your portfolio companies. So tell me a little bit about evolutionary capital and specifically some of the differences between from that versus say venture capital or other private equity investments.
Yeah, we've tried at when we put this product together and kind of working with some of the entrepreneurs over the last couple of years, we've tried to create more of a product, something that we didn't have to revalue all the time, so that we could have a discussion like this and say to entrepreneurs, this is the way that the world works, where and we'll get into a little more of the valuation in a second. But if you look at kind of across the venture capital, the big things that separate it is venture is typically a minority investor. They typically invest small amounts of money. The purpose of the capital could be seed, proof of concept, scaling, that sort of thing. The companies are typically very early, typically not making money. And obviously, when you're going to invest in a company like that, you expect super hyper growth. And improving that the company can grow is usually a big barrier. Let's jump all the way over to private equity, the far right side, and it's quite the opposite of venture capital. They tend to always take control. They want to write bigger and bigger checks. They tend to use leverage. Sometimes in the larger deals, it could be 3, 4, 5, 6 times leverage. So the company's always going to have to kind of wrestle with the bank and so forth. And because of that, the company doesn't necessarily need to grow as fast as obviously the venture capital. Obviously, growth is. And so Evolution sits dead in the middle. We go in, we own 50-50 with management. We tend to write kind of $3 to $10 million checks. The purpose is growth. It's to build out that infrastructure. It's to really kind of set the foundation for a sustainable company. And and so I would say if you can take a company from $6 million in revenue to $20 or $30 million, and obviously continue to be profitable during that period of time, it really sets the stage for management to do whatever they want to do. So that's we just we feel like we sit right between the two. And I think on the control thing, and I kind of breezed over that. Oops. Evolution is initially in control, but there's a mechanism where typically at about 3 times return of capital, the return goes back to the management team.
Yeah, and I guess from my experience, there aren't a lot of companies or private equity firms sitting in this space of the smaller investments of 3 to 10 million. They all kind of want to play in that 10 million plus, and is that fair to say?
Yeah, John, I say this frequently, and everybody challenges it when I say it, and then we kind of, sometimes it takes me a year to convince them of this, or maybe 10 years, I don't know, but we don't know of anybody else that's playing in this space. There's lots of people that start here and then go larger because it's easier to invest in larger businesses, and then obviously there's lots of venture space, but from a committed capital perspective, we're unaware of anybody else doing it. And if you're out there and you know somebody, email me, and I'd love to find one.
Okay, no, that's great. So next question here, what investment criteria are you looking for and company characteristics that kind of need to be in place when you're trying to implement this evolutionary capital structure?
Yeah, and let me and I'll get into that in a second. I do want to say to the audience, I believe that the 5-pillar process works in any business. Any business in any geography, anytime. And, sometimes it just may take a little longer because of the margins and so forth and the scalability of the company. But having said that, Evolution is a small fund, and we can only invest in 2 or 3 companies a year. So we tend to look for companies that are at least a $500,000 of EBITDA that have a plan to get to $5 million of EBITDA in the next 5 years. Those companies tend to be 3 to 7, 3 to 10 million in revenue. They tend to have kind of 10 to 35, 50, probably at the most employees. They tend to have be leader or founder dependent. They're still the main salesperson signing checks and so forth. I'll tell a little story later on in this thing about we had the Accurate Group, a company we invested in 2009. The founder still signed every check, every title policy, he signed everything on the day before we made the investment. So hard to control when you're when you're signing everything. So obviously they're undercapitalized. There's if a company undercapitalized, they're going to need capital for something. There are great evolutionary companies that just don't need capital because they generate enough to do stuff. Obviously, high margin, low capital intensity, good cash flow cycles, growing industries are obviously are nice to have. So that's kind of how we screen for the deals, the 2 to 3 deals that we would fund in a year.
Yeah, and companies of this size really kind of need that capital to get to another level, whereas bigger companies might just be happy living off the cash flow that they've generated. And that's why I think this is such a great kind of middle layer of capital between that venture capital and that bigger private equity.
Yeah, and remember too, bigger companies can borrow from banks, and smaller companies can borrow from banks, but the bank is going to put you in their business credit group where they're looking at your personal balance sheet, asking for your personal guarantee, renewing every year, creating a lot, and I've been in the first business I ran, we borrowed from banks. We signed limited personal guarantees. We wrestled with banks when they went through their ups and downs, and honestly, when you're trying to grow a business, that's wrestling with a pretty big variable.
Okay, great. So we're getting into the part of the presentation that really gets me excited and talking about some more of the specifics. But, you know, in what situations does kind of this evolutionary capital structure that you're putting in place work best?
Yeah, and I think it's, let me back up. The two deals that had the biggest impact in my life were deals that we put an ad in a paper that said, "Are you looking to buy out your boss? Give us a call." And so it's in that case it's a junior person in a firm that sees something and they just can't get the owner, the whatever, to run after the growth, or they just don't have the money to buy them out. And that's probably a big one of ours. Misaligned partners are big. You know, two partners get into a business and they're all hunky-dory for 4 or 5 years, and then one day one decides they want to do something else, but the math problem is such that they can't afford to set, one wants to just kind of take the money and the other wants to grow, and so that's another big one. We Heavy Equipment Colleges, a company that we financed middle of last year. Again, great similar story about Bob Albano, the president of that company, had some partners and they were happy just where it was, and Bob wanted to grow it, and so gave us an opportunity to get involved. Obviously, insufficient working capital. Companies got great sales function. We invested in a company a couple years ago called ROI Networks, and these guys are great salespeople. They had lots of opportunities. They just literally didn't have the capital to fund it. We would have funded that less than a year ago. And so, but in their first year, up 35%. This quarter's up again. So, obviously, a leveraged balance sheet holds companies back. We're working on a deal right now, hope to close, where we feel that if we can get rid of their $2 million worth of debt, it frees up management. The current debt payments are so overwhelming that they literally can't make investments in people, and so we, that sort of thing. Geographical expansion. We invested in two entrepreneurs up in Seattle, Washington, called Cascade Healthcare, and they had been able to kind of they do medical training, and they had expanded from the Washington market to the Oregon market to the Northern California market, and our capital has let them open 4 or 5 more locations. And then obviously strategic acquisitions. We invested in a company called Turf Ventures that acquired a series of golf course chemical distribution across the Midwest. So those are if you kind of go through the portfolio, these are the reasons that we've been able to work, to get into companies and work with the entrepreneurs.
I love that ad that you had, buy out your boss. That's pretty innovative there. So if anybody's on the webinar wants to buy out their boss, I guess you know who to talk to.
John, what's crazy is I tell that story a lot, that that we ran those 2 ads and it created the 2 deals that made the biggest impact in my life. And I can get into that in a minute, but and then I don't think we've run it since then. So we do it on the internet, but we don't do it. Those were actually print ads. So yeah. Anyways.
Okay, great. Hey, and just a reminder to everybody on the webinar here, we are going to be taking questions in the last 20 minutes. I see a few questions kind of rolling in, but if you do have questions as we go through, be sure to enter them in here on our GoToWebinar panel, and we'll definitely get to those at the end. So this is going to be the fun part of the webinar, and not that the first part wasn't fun, but this is really where we get into the nitty-gritty, where you walk us through some terms and some examples of really how evolutionary capital works for a business owner, and we provide some of the metrics around it. So could you do that for us, Brendan?
That'd be great. Remember, the kind of the example we talked about earlier, where there's an entrepreneur's got a $4 million business making $1 million of EBITDA, and they've got to make some of these changes. And so, we try to come up with this structure that would give more of the upside to the entrepreneur and their team as the companies were successful, but also created a spot where evolution would be protected if they didn't get some of those growth. So kind of more of a venture capital structure where evolution has a preferred return, as kind of a first waterfall, and then as the company becomes more and more successful, Evolution owns less, and then the management and the initial owners would own more. So jump to the first slide, scenario A, and this is where the company, we might start with the negative one, can kind of move up the fun waterfalls. But this is a scenario where the company was not successful. It was a $4 million business. It didn't grow. Things didn't really happen very well. And so 4 years later, we sell the company. And there's really, if you can look at the spreadsheet on the screen, there will eventually be three different waterfalls. So in this case, the company wasn't able to kind of clear the preferred return. So obviously in a downside scenario, Evolution would get their money back, or 100% of those proceeds, and the initial shareholders and the management wouldn't get anything. So it's the downside of evolutionary capital is if you don't think you can grow, if you don't believe in what's going to happen here, Evolution does have a downside protection. Let's move on to people we're a little more excited about, scenario B, which is it's kind of middle of the road. Company grows to $3.5 million of EBITDA, sells for kind of $21 million, and we've kind of manipulated those numbers so that it fills up the first two buckets. So the first bucket is Evolution got its money back plus the preferred return, and then at that stage of the game, Evolution falls to, if you can look on the screen, there's the second waterfall bucket of B shares. Evolution falls to 40% of the proceeds, and current shareholders and management then go to 60%. And so if you look in that scenario, the first two buckets were filled. Evolution got about 57% of the proceeds, and the initial shareholders and management got about 43%. So kind of jump to scenario C, is the company hits its growth plan. And this is again, you can see that there are these three different waterfall levels, or kind of how the cash would be distributed. Obviously, Evolution still gets its preferred return. The second bucket gets filled up when Evolution gets 3 times its money, 3 times its original investment. So obviously, during that phase, a period of time, the initial shareholders and management also get their 60%. And then once we get 3 times our money, the third bucket kicks in, where the current shareholders and management obviously get 70%, and Evolution falls to 30%. So in that scenario, Evolution would get 36% of the overall proceeds, and the shareholders and management would get 64%. I do want to also point out that it's really at the end of this third bucket in the C shares where the control of the company flips back to management. So let me jump to scenario D, if you wouldn't mind. And scenario D, if you guys remember in the beginning of the webinar, I talked about how that during the life of the company, we own it 50-50. So this is a scenario where there's actually kind of a fourth waterfall. If the company is profitable enough through the life of the proceeds, and there's so much cash flow that that during the hold period they do distributions. During that period, the initial shareholders would also get 50%. So during the life, we own it 50-50. And so in this case, the first bucket is filled up prior to sale, and then obviously the rest of the proceeds are split 40-60 and then 30-70. So it does shift it a little bit, where Evolution would end up owning or getting about 34% of the proceeds, and management would get about 66%. We've been working with this so long, it seems easy to us, and I can say that it probably, people are shaking their heads. Hopefully we've explained it well enough, but if you have any questions, please please reach out or ask at the end here.
Okay, and maybe I have a few questions here just as we go through this. So in terms of the management on this slide, this is new management that you'd bring into the fold, or that's identified, I guess, between you and the existing shareholders?
Yeah, that's, it's part of the plan that we would put together, but it's for new and existing. When you're working on a new deal and you all of a sudden have capital and you're going to start growing and you're going to start hiring people, you have to be able to offer, not only solidify the existing management team and make sure that they own a piece. A lot of believe it or not, I would say 90% of the time we work on a deal, the senior managers don't own any of the company. Or at least a significant number, and so we've got to get them ownership, and not only the existing people but the new people.
Yeah, and just again for clarity, I mean this is the structure that you put in on every one of your deals, then.
That's what we've come to. Yes, we just feel it's it attracts the type of people we're looking to partner with.
Okay, great. So, there's definitely lots of capital out there. Everybody talks about, the billions and billions of dollars of dry powder out there. So, capital has almost become, just a commodity. How does evolutionary capital, differentiate itself, and how does it provide value on its investments?
Great question. And I think part of the reason that a lot of private capital doesn't chase these size of businesses because it is hard. They're understaffed, undercapitalized, and it's hard to do. So, I go back to the 5 pillars that we talked about earlier, and just the absolute. I've been very active in the entrepreneurs organization, Small Giants. I'll go to just about any small business conference I can dream of, the Inc. conferences and so forth, and as I sit there and I watch everybody just scribbling down all the great advice that's going on, 99% of those people walk out of that room and they get back on that small business treadmill and they just can't do it. They just don't have they want to do it, they just don't have the time to implement these things. And so what evolution does, and kind of one of the reasons that we want to take control in the beginning of a business, in the beginning of our involvement with a evolutionary leader, is because we think it's so important. We have to make sure that these things get done. So number one, and we talked about them briefly, is great financial statements. And I will tell you, we have spent 9, 10, 12 months working on financial statements with a company before we invest, just because they literally are that screwed up. I mean, the financials are fundamentally correct, but they can't explain to everybody else in the company, outside the company, what's really going on. And I could do an entire webinar on pillar number 1. And I will say this, anybody listening on a small business, if your financials are in great shape, your business is worth more. If your financials are in terrible shape, your business, you're going to have a hard time finding somebody that wants to invest in you. The plan, we spend lots and lots of time on the plan, and the plan it's not our plan, it's the business owner's plan, but we want them to think it through, we want them to communicate it to people, we want it to be broadcast to as many people as is willing to listen, and part of that reason is it attracts better people, and we've talked about it over and over and over again. I think if you ask any business leader in the country, what's the number 1 key to success? It's going to be getting people aligned that share your values. And so, if you can explain where you've been, where you're going, you can attract better people. And then the transparency and accountability. I had promised you I would spend a little more time on this. That is really what we ask a small business to do, is implement or start using a business operating process. It sounds cheesy. I promise you, when I was just joined EO and I was sitting in the back of the room listening to people talk about the fact that they read a book and now that book's telling them how to run a business, I rolled my eyes. But I'll promise you this, the people that do it are successful. And so, we tend to, there was a book called Traction, or Get a Grip. Get a Grip's a fable. Written by Gino Wickman. There's a book called Rockefeller Habits, written by Vern Harnish. These processes have been around for 100 years. If you go back to the book Think and Grow Rich, it's really the same thing. And what it does is it forces the entrepreneur to to think through the plan. It forces them to kind of use a common knowledge. It forces them to continue to share the direction of the business. I mean, Jeff Cadlick and I, my partner, we run a very small office here, and I remember when we put in EOS, I was so positive that everybody in our firm knew exactly where we were headed, and they all looked at me and said, thanks for sharing this with us. So what we find is that once you implement one of these processes and get the foundation of the financials in place, it's really at that stage of the game that the team can decide what their purpose is. Look, making money is a table stake. You got to do it. But when you find your purpose and you can share that purpose and share your core values, these things just give you the foundation to do those things. And nothing in this that I just said isn't something an entrepreneur can go do on their own. Is nothing in there an entrepreneur can't go do on their own. Everything here is in a book. Entrepreneurs can do this on their own. They don't need evolution to do it, but it's just hard to actually make these changes.
So in addition to introducing these concepts and these processes, do you act as the I don't want to call it disciplinarian, but the guy that kind of ensures accountability, let's say?
Yeah, what I would, as an entrepreneur, I deem myself an entrepreneur. I view it as we're kind of a coach, and some entrepreneurs, some players move faster than others, and we encourage communication between all of our partner company leadership, because we want them to share ideas and concepts also. So I think we're more of a coach. I think we're more of a hey guys, we all agreed we would do this. Let's get it done. So I would be curious to ask our partner company leaders how they would. I guess they would how they would react to that. But
yeah, and
that's how I view it.
I guess I've dealt with a lot of private equity firms, and everybody talks about value creation, and they bring more than just capital, but rarely have I seen it articulated, and really there's a methodology behind how you're bringing value to the table. So I commend you for that, and that's great. Maybe.
I did promise John that I would give kind of a quick example, and if I think we have a couple minutes to do that. And I'll go with my favorite example, and I'm happy to go with my less favorite examples. But in 2009, Evolution invested in an entrepreneur down in Charlotte, North Carolina, a guy named Paul O'Connor, and he had a company called the Accurate Group. And I referred to him earlier as the guy that was signing all the checks and signing all the title policies and all that sort of thing. He was absolute control freak, and I mean that in a positive way. All self-respecting entrepreneurs, can appreciate that. But he saw an opportunity. He was one of those people where an associate of his replied to the ad that I referred to. You want to buy out your boss, and he knew that he needed capital to approach his customers. He was largely a title agency in Charlotte, North and South Carolina, and he believed that he could transform the company into a real estate transactional services business, which at the time I had no idea what that was. But what he felt he needed at the time was he needed a leader that could call on those players, somebody that he was a true ADD entrepreneur. He knew he needed somebody to come in and actually run the operation for us, or for him. And so and he knew who that person was. And so if you go from, at the time we were looking at this company, he was kind of a software business that had a connection to some of his bigger customers, and he was probably $6 million in revenue, probably 30 employees. He didn't have any of his data backed up. I mean, it was a true entrepreneurial hornet's nest. And if you fast forward 3 years, he went from $6 million in revenue to $53 million in revenue. Cash flow went from $300,000 to $400,000, kind of even below our kind of minimum mark, to a little over $8 million. Employed about 250 people. What I think the thing that we're the most proud of about Accurate, though, is they did recap that business and brought on a whole lot more capital, and later on. But what's so neat about it is they've continued to grow. I mean, they should be 125 million bucks this year. They've added hundreds of really high-paying, wonderful jobs, and it's really those businesses that you're just like unbelievable. So what's so neat about that business is if you looked at their financial statements it took us months to figure out their financials when we went in the deal. 3 years later, they were doing 25,000 transactions a month, and they had the ability to dig into any one of those transactions on the fly and show what the profitability was. Those financials were broadcast in all of their offices across the country on a TV screen that updated every 3 seconds. Everybody, and it compared it to plan. Now, I'll admit this is not our stand. That they really took it to a whole new level, and we don't have that in every one of our deals. But from a financial reporting perspective, it was unbelievable. And obviously, their plan. I chuckle as I was getting ready for this call. When 3 years into it, they sent us a kind of a summary showing what they promised us and what they delivered, and it was they probably delivered 300% of what they had promised us. But they would always compare it to plan. You look at the types of people they were able to bring on. It's unbelievable. And you go back to the transparency and accountability piece. How much more transparent can you be than broadcasting your financials that are updated every 3 minutes or 3 seconds? And then once you have all of that data, holding people accountable for what they're supposed to do becomes a whole lot easier. And I think if you look at that management team, they were willing to be held accountable, first and foremost. And so that's what makes it such a wonderful, process. Once you get it in, evolution goes from being a coach to a cheerleader, because you can't get out of the way of a company like that. So.
Yeah, no, that's
I can tell you less exciting ones, but we're proud of all of them. I could fill an entire week of webinars talking about our partner companies.
Well, we'll definitely have to get you. You've already named a few different webinar topics that we can get you back on for, and I'm sure our audience would be excited to join us again. So we have a few questions rolling in here, and maybe that's a good place to get to now. Brendan. So, Megan, maybe you can help us out and maybe give us some questions from our audience. And before we do that, Megan, I also want to tell our audience that we have a 5 Pillars of Business Freedom checklist that's available as a download. So you can go into the GoToWebinar window pane and download that checklist and see, some of the processes that Evolution Capital uses to implement the 5 pillars of business freedom process that they use on their investment companies. So you can definitely download that. So Megan, maybe you can let us know if there are some questions from our audience here.
Yeah, sure. I have a question here. Are there certain industries Evolution Capital likes to invest in more than others?
Yeah, let me stress again, Megan. We believe the process works in any industry. But having said that, Evolution would, we're a small fund, limited to 2 to 3 deals a year. We would focus on the higher margin businesses. So we would not do a real estate deal. We would not do like an energy related deal, energy exploration. Other than that, if the margins were right and the management team and the growth plan was right, we would consider pretty much any other industry. We've looked at some retail, but we haven't been able to really get comfortable with that yet. So I would say retail is kind of one of those 50-50 ones.
Okay, great. Okay, we have another question. What are your thoughts on organic growth strategy versus acquisitions?
I love the question. I will say that an organic growth strategy is much more valuable to financial buyers than an acquisition strategy. Having said that, I think we're open to both. But ultimately, the organic growth strategy is more valuable, and it's easier to finance and predict.
Great.
Can you comment on that a little bit, Brendan? I mean, that's interesting. I've seen a lot of companies that and other private equity firms that kind of encourage the acquisition growth strategy. So how do you see it as being more valuable?
Yeah, I mean, obviously acquisitions, they're faster, right? I mean, you can double your size in one day with a stroke of a pen, and so it's faster. It's also more capital intensive, and we view it, and I think most financial buyers view it, that if you have if your growth is contingent upon buying other things, it's more expensive, and so the fact of the matter is that they're going to pay less. If you can prove, like in an accurate group scenario, that you can grow without buying things, people pay. It's easier to understand. People can see the growth. I'll also say, if you go through the history of all acquisitions, the probability that an acquisition is successful isn't a sure thing. I mean, you've really got to match up the values and of the teams and so forth. So look, we do acquisitions. We encourage our successful 5-pillar compliant partners to go out there and aggressively do it. But if they can figure out organic plans, it sure makes life easier.
Okay, great. Thanks for expanding on that.
Okay, we have another question. Okay, so is there any leeway at all for a company who has not yet hit their growth plan, by the 5th year, but is on target to do so for the 6th? How does Evolution Capital work with that?
I love the question, and I would love to have our partner company CEOs answer it. But look, plans are they're obsolete the day after, but it's a great reference. I would say 80–90% of the time we get into a deal, we have to adjust the plan. It wasn't more than 2–3 months ago. Bud Bryan, who's the CEO of our Budco Financial Services up in Detroit, he got in the car, drove here, and explained how he needed to adjust his plan. And we can't run the businesses. We know it's hard. It's in fact, when you set sail for a destination and you hit a storm, you're going to have to adjust your plans and kind of figure out a way to navigate around the storm. And we expect that to happen in most of our deals.
Okay. Thank you. All right, let's see. And now I know we had a question about what industries would you prefer, and this one's asking, is there any industries you would not prefer?
Maybe I answered the wrong question before. Sorry. I think like I said, we wouldn't do real estate deal. We wouldn't do an energy exploration deal. What we feel like we've really kind of excelled at, if you look at the portfolio, is training businesses, business information services, any kinds of payment processing. We've done a lot of software deals, kind of software that kind of relates to kind of a pretty standard product, and some that not. So the key to Evolution is that other than real estate and energy exploration, we believe that the process works in any business. So it's just, I think the key is that there's a high enough gross profit margin that the company can grow a little faster than many.
Right. Okay, I think we have time for one more question.
I think we actually have time for more questions here, Megan.
Okay. Now, you're saying that, Evolution Capital is like a 50-50 partnership, and so I guess if you could talk a little more about, they're asking to talk a little more about the day-to-day operations of the business and hiring and firing, the management team, is one of the 5 pillars, and that's important. So how does that all work out between your relationship with your invested company?
Yeah, as I mentioned earlier, Evolution cannot run these businesses. It's got to be run by the leadership teams, and they've got to have the freedom to motivate and pick their team. Obviously, if any one of them called and asked me my opinion, I'd be happy to tell it. But fundamentally, we rely on them to pick their team. We rely on them to motivate their teams. We rely on them to create the plans. And we're obviously out there looking for additional resources. If we can find people that can help them, we'd be more than happy to introduce them. But it really is, and I can't stress it enough, and I believe that every one of our partner company leaders would back this up. Happy to have you call them. It's up to them. It's on their shoulders, and that's the way it should be, we think.
Okay. All right, this question, how do you build your pipeline of prospect companies to invest in?
I love the question. It really, what's so much fun about Evolution is that I think we have a pretty unique product, and we're chasing a pretty unique evolutionary leader. And so really the goal is to get the idea of Evolution Capital out there. But believe it or not, I know everybody believes this, the website, or the web and is really the new newspaper. And so Barbara Hernandez in our office is our chief branding officer. I'm not really sure what that title means, but she's that. And we get 8 to 12 inbound opportunities a week, largely from just kind of getting our message out. And obviously we hit the Inc. shows, we do a lot of the EO stuff, and just try to be around as many entrepreneurs as we possibly can. It's what I enjoy doing.
And you put ads in papers too, right?
I said we haven't done that since 2009. I'm going to have to tell Barbara. It's every time I think about the fact we haven't done it since 2009. But we do it in the web. We do it kind of in more of the web-based stuff as opposed to print ads.
Yeah, for sure. No, and I joke about it, but only because I think it's such a fantastic way to find partners. Right? There's so many people that I don't know, want and have the desire to buy a business or to buy out their boss, like you had mentioned, but maybe just don't know where to seek it. So the fact that you were able to innovatively find and kind of ferret those people out is pretty amazing.
It's been fun. We probably like it too much.
Yeah. So I see a couple questions here on my end that from our audience that I can ask. And so have you acquired any overseas-based companies, in Latin America or Europe, and are you guys open to it?
We couldn't do a foundational kind of an initial investment in a foreign company. Our fund documents are limited to North America, so Canada, U.S., I suspect Mexico, although we've never looked at one in Mexico.
Okay.
But we do have, and I will say, we do have many companies that once we make an investment in them in the United States, that they do in fact go, they do expand abroad, but they're based here.
Okay. Another question here from Jeff. Is there an exit for Evolution Partners after the third waterfall is paid out, or does the exit actually pay that third waterfall out?
No, that's a great question, and it's at that stage of the game we tend to follow the management's lead. So if they kind of see a bigger exit in 2, 3, 4, 5 years, we would definitely tag along. If they make a decision to basically say we're going to run this for the next 35 years, we would then go to our investors and kind of see who wanted to tag along for the long haul, and then who didn't. But usually at that stage of the game, there's lots of options to take care of that 30%. Many of our investors, our larger ones, are happy to ride along for the long haul, and then obviously the ones that don't, we would create some sort of market for.
Okay, great. So Richard asks here a couple questions specifically about your fund and the company. So where does the funding come from for Evolution Capital, and how many people work in Evolution Capital?
That's a great question. All of our investors are private investors, so there tend to be wealthy family offices, that sort of thing. And quite frankly, my partner Jeff Cadlick and I are, at least in the first couple of funds, we're some of the larger investors. But it's private people, and we're pretty proud of some of the things that those people have done. And then from an Evolution perspective, infrastructure, we have seven total. So we're still pretty thin staff. We just added 2. So we're growing at a crazy percentage, 40% in the last month or 2.
Okay, great. So probably have time for one more question here, and this comes in from Bruce. Again, talking around the acquisitions, but what steps do you take to manage the risk associated with acquisitions when they are used, I guess, in that growth strategy?
Yeah, that's a great question. You know, we're big believers in trying to kind of tie values, and we just find that if, you know, it goes down to the people, and if you feel like that you've got people, we call them evolutionary leaders, you know, people that want to learn, people that, you know, that want to be part of a team, people that want to, you know, to be something bigger than what, you know, than what's there now. We just find that you got to find those people, and it's not easy. It's not easy.
Well, that's great.
You know,
go ahead if you want to finish up there.
No, I just say it's you know, I would say that, you know, the acquisition stuff, it's a big piece, but literally, in my opinion, it comes down to the relationship between the leaders of our partner companies and the leaders of those other companies. And all I ever keep asking is, do you want to spend time with these people? Do you like them? Do you trust them? And you know, if you don't like them and trust them, you should slow it down. And you know, that really is that, and plus a decent financial deal, I think, are by far the biggest issues.
Yeah, well, and you know, I think that you've really articulated well how you're different than other private equity firms in terms of the, you know, the niche size of businesses that you invest in, you know, the disciplined approach that you take, and the strategy for growth. Where, you know, you know, I wasn't even sure of this before the webinar, but the questions that you've answered have kind of showed me that your strategy is more around that organic growth rather than the growth by acquisition. So, you know, all of those factors together, in my view, kind of really differentiates you guys from other, you know, private equity firms in the market. So, you know, a fantastic job that you're doing, and again, commend you on your success there.
I will say one other thing on the acquisition front, and I know we're kind of out of time. We view that in the beginning parts of an ownership of a company, when they're still working on their 5 pillars, we don't view them as candidates to start buying things. As soon as they get their 5 pillars in place and they are kind of, you know, and they've got that team in place, we do want them to look at acquisitions, and it's just, and so we, you know, and quite frankly, our investors are pushing us to do more of that stuff, you know, kind of back up the winners with more capital. So I'll leave it with that little teaser.
Great. Well, Brendan, I appreciate your time. Thank you to our audience for joining us today. Again, if you want to download the 5 Pillars of Business Freedom checklist that's on our site, please do that. Again, thank you everybody for joining us today, and Brendan, great presentation. Thank you.
Thank you very much, Megan and John.
Have a great day.
Thank you. Bye.
Thank you.